there are unfortunately implications of this, as we'll have less money to spend on education, we have less money to spend on healthcare, as well as that of infrastructure in the country.
Finance Minister Enoch Godongwana delivered his maiden budget speech on Wednesday afternoon. He outlined a number of areas in which South Africa's public finances have improved, including a reduction of the deficit and an increase in government revenues. But will this last? Are we seeing the quiet before the storm? Well, in this extract from an exclusive client webinar, CRA analyst Bheki Mahlobo unpacks some of the longer-term risks facing South Africa's economy. If you enjoyed this analysis and you would like to become a subscriber to the CRA services, there's a link in the description below where you can find out more information. Enjoy.
The trend line of debt levels, unfortunately, is an upward trajectory, which we gauge by looking at gross debt as a proportion of GDP since 1993-94 until the projected years of 2024-25. And what we see here is that last year there was a GDP rebasing, which somewhat looked like debt levels in the country are now more favorable. However, the key point here is to look at the trend line of debt levels, and it's on an upward trajectory, which is negative for the country. Not only that, but what we also notice is that if you take the snapshot of next year's debt levels, the projected figure, South Africa is on the higher quartile when you compare to other emerging markets with a projected debt levels of about 74 as a proportion of GDP, which is close to that of China of about 77%, India 77%, and that of Brazil at 100%. A point to note, however, is South Africa's economic performance when you're comparing it to these emerging markets. And these emerging markets outstrip that of South Africa. For example, that of China, with economic growth levels being projected at 5%, India at 8%. But also looking at the quantum of debt that was added towards the fiscus over the past decade, you see that this has been a massive amount, with 36 percentage points that has been added in South African debt levels, which is comparable to what we see in, for example, Brazil, and massively outstripping other emerging markets. So if you see an increase in debt levels, unfortunately, that results in investors perceiving the South African government to be high risk. And that's exactly what we see when we look at government bonds. You're looking at a chart which tracks the difference between South African yield bonds between that of the United States, and we come to the calculation of calculating the yield differential from 2010 until 2022. And what you'll see with this chart here is that since 2010, government yields have been on an increase from about 5% in 2010 to its current levels close to that of 8%, in fact, being slightly above that of 8%. This graph is a representation of the perceived risk of the South African government, and it's on an upward trajectory, meaning that investors are perceiving the government to be high risk. And when you add to that geopolitical tensions, for example, as well as that of monetary tightening, the hiking of interest rates, we could then start to see yields start to rise from a South African perspective, which would not bode well in terms of the fiscus. And we gauge that by looking at government expenditure items as a proportion of total expenditure from 2005 until 2023. And what we see is as follows. You're looking at education as a proportion of total expenditure in the country. And what we see here is that education is projected to remain roughly in its long-term trend line of about 20% of the budget being allocated towards education, 11% being allocated towards economic affairs. However, I draw your attention towards debt servicing costs, which are now crowding out expenditure on other important items, such as that of the healthcare, for example. In fact, debt servicing costs are projected to reach 16%, which is a lot more than what we spend on healthcare, for example, at 11%. There are, unfortunately, implications of this, as we'll have less money to spend on education, we have less money to spend on healthcare, as well as that of infrastructure in the country. What has essentially saved the South African government's bacon in this financial year is what we've seen in commodity prices. And we gauge that by having a look at the South African trade balance since 1994 until 2021. And what we see is as follows. What you see on your screen here, you see the exports, which you read as the orange line, outstripping that of South African imports, which you read as the red line. And this is reflective for South Africa's exports are predominantly made up of commodities. So whenever we see a commodity rally, that usually boosts South African revenues, boosting government revenues and so forth. Now, the difference between exports and imports results in a trade surplus, which you can read as the shaded gray area on your screen here. Unfortunately, with tapering, it may lead to weaker commodities, which may negatively impact the South African revenues. However, from a geopolitical standpoint, South Africa also does stand to benefit. For example, if you were to look at the gold price as of right now, the tensions between Russia and Ukraine has sent investors towards safer assets, that being that of gold, which does also boost the country. So what are the key risks that we're highlighting ahead? What is the coming storm that we flag for you in this webinar? Well, firstly, the commodity rally is likely to slow, which may impact future government revenues. Global uncertainty may shift sentiment from emerging markets. South Africa, for example, if you recall that chart that I brought to you earlier, is seen as high risk. Therefore, we could see a move away from South African equities, away from South African bonds, which will be negative for the South African government. Economic growth is still to remain low, largely because of the fundamental reforms will not be implemented from a policy perspective. We're not going to really see a recovery in employment numbers. We're not going to really see a recovery in economic output of the country. Possible interest rate hikes may hamper economic performance in the country as the developed world then starts to taper, then start to increase interest rates. South Africa could follow suit. The South African bank could follow the same tapering trend that we see in much of the world. And unfortunately, that results in a decline in economic activity in the country. And our call for you is that 2022 GDP performance may be lower than that of 2021. There's been no substantive curtailing of government expenditure and no substantive move towards reforms, which is likely to lead to higher deficits, higher debt levels, as well as that of low economic growth levels in the country. And unfortunately, in an environment in which the South African economy does not grow, we set ourselves up for future vulnerabilities, like the ones now that we are now seeing from a geopolitical end. Just a reminder of the products that we do at the CRA. We write reports, both formal as well as that of informal. If you're not receiving our Monday morning briefings, which comes in the form of a Monday risk alert sent to you every Monday morning, please get in contact with Sharon. We also answer any form of questions that you may have. Please send an email either to me or Sharon, and we'll get in touch with you soon. I'll now hand it over to David to facilitate the Q&A section.
Well, thanks very much, Bheki. I thought that was an excellent overview. And also, I think you contextualized the budget speech in terms of the national economy and also global factors as well. So I thought that was excellent. We will have now an opportunity for you, our audience, to direct any questions that you might have to Bheki by way of follow-up. And I did see a hand. But before we go to Charles' question, I will just say a few thoughts from my end as well. I think we have been surprised by that reduction in the deficit, and that is certainly something to commend the National Treasury for. It's still quite a long way off from where we would like to see it. I mean, if you consider the deficit is going to be 6%, that's about 3 times higher than the growth rate. And I think the key takeaway for us is, fine, you can consolidate government expenditure, you can benefit from this boost in commodities, but unless you really get growth going again, you're not going to see a meaningful reduction in unemployment numbers. And that's going to put a lot of pressure on the fiscus in terms of social grants as well. And a lot of the core structural problems in South Africa remain. The infrastructure backlogs, I think, are key. And even if this commodity cycle holds for a period, we're not able to get our raw materials, our minerals out of our docks fast enough. And commodity prices, as you've pointed out, Bheki, are cyclical. So there really isn't much room for complacency here. And I think this metaphor of the calm before the storm is an appropriate one. This is perhaps a room for taking a bit of a deep breath, for consolidating after the damage that was caused by the pandemic and also the government-imposed lockdown. But that doesn't mean that we're out of danger just yet. And if you consider we've got elections coming up in 2024, there are also going to be some significant political pressures coming from the left-wing rump of the tripartite alliance, which are going to affect the fiscal situation as well. That government wage bill is going to be huge political pressure to push that up. The minister was able to hold the line in this speech, but will he be able to resist that pressure going forward? And ultimately, he is much more of a political finance minister than we've seen in the past. Thanks for watching. If you enjoyed this analysis, you might want to become a client of the CRA. There's a link in the description below where you can find out more information on our products and services, as well as our pricing. Also, remember to leave your thoughts in the comment section below. Do you think this was a good budget under the circumstances? My name is David Ansara. This is the CRA. Until next time, take care.